Welcome, everybody. We are so glad you're able to join us today for complex wage and hour calculations. You're here with Amy Letke and Karen Hamilton with Integrity HR, and we are so glad that you have decided to spend the next hour with us as we talk about how to calculate the challenging elements of pay. So today what we want to cover is a number of details regarding those challenge areas that sometimes we might forget about, and because they are a little tricky, we wanted to make sure you had a chance to really review your current pay practices. So without further ado, we are going to keep things in motion. So in case you can't see us, now you can. We are your presenters, Amy and Karen, and today what we want to let you know is we're going to answer some of the top tricky areas that we run into with respect to pay. Now this isn't going to cover everything, and you might have some specific questions about your own calculations. So we only have limited time on the webinar, so we're going to cover what we can, and if you'd like to follow up with us afterward with a question about a calculation, we'd be happy to help you with the calculation following the webinar. Now, if you've got some specific questions as we move through the webinar today, go ahead and enter those into the chat box. We'll take a look at those, and if we have some time at the end of the session or during our session, we will definitely do our best to answer your questions. So again, we are so glad you're here and want to thank you for taking time to be with us. All right, so let's take a look at what it is that we're going to cover today. There's really three key areas that Karen and I want to talk about, and that's the common mistakes that we see happen all the time. These are easy, some are not so easy, some are really unusual. And so we're going to kind of cover what those are, right, Karen?
That's absolutely correct.
Then we're going to get into some rules around these compensation plans. And then we're also going to talk about maybe how to put together an ideal pay plan, right? So without further ado, let's go ahead and jump right into that. Today's focus is also on compensation plans for the states of Indiana and Kentucky. One of the things we want to make sure of is that you might have local ordinances or state requirements or even city requirements, and make sure that you are familiar with those with respect to overtime and the calculations that we're talking about today. Some states, some localities have different means for calculating overtime. So we're not going to cover everything broadly from California to New York. We're just going to be focusing on our little region here in Indiana and Kentucky. Okay, so now let's go ahead and jump into common mistakes relative to compensation. Now, when we think about these compensation mistakes, there are about 7 areas that we want to focus on today, starting with overtime. We're going to then jump into wage ordinances. We're going to talk about what to do with traveling employees. Then there's 2 types of discretionary bonuses, both discretionary as well as non-discretionary bonuses, how you treat those. Then we're going to talk about non-exempt employees, those who are eligible for overtime, on-call pay, and wage theft. Keep in mind the focus again for today will be on Indiana and Kentucky. And then when we're talking about these wage calculations, these are predominantly for only non-exempt employees, those who you're paying hourly, those who have one specific wage, right? Or actually one hourly wage. So we are actually going to cover a couple of those hourly and dual compensation too.
Absolutely.
Right,
we have some great examples today.
So this is mostly for your hourly paid people, and we're going to cover various types of that. So, Karen, let's start off with talking about overtime. Why don't we talk about what that is all about and what we're going to cover today? So
Absolutely.
Turn over to you.
Absolutely. I think we need to start with the very basics, and I'm sure that this is not going to be new for anybody. But the whole idea about overtime comes from the Federal Labor Standards Act, or as we know, the FLSA, and non-exempt employees must receive 1.5 times their regular rate of pay for all hours worked over 40 in a work week. And again, that's for Kentucky and Indiana. We know there's other states out there that actually have overtime rules. If you work more than 8 hours in a day, you get paid overtime, but we're not going to worry about that today. So when we calculate an employee's regular rate of pay, we also, and this is where we're going to be talking about this in a little bit more detail, is if your hourly employee or your non-exempt employee receives any type of bonuses or commissions, and that's where it gets a little bit tricky. Before we get into that, though, I want to talk a little bit about determining the work week. So again, overtime, lots of different things. States and localities may have daily overtime requirements, and that's why it's important for you to know that. And then, obviously, remember that determining your work week will also determine your employee's overtime. And the way that you do, oh, go ahead, Amy.
No, go right ahead.
Okay. So I was going to go to the next slide. And the way that you determine an employee's overtime is really simply that, or overtime is determined by the number of hours the individual works in a week. So basically, and this is where people get a little bit sideways, is sometimes, and Amy, I know you find this hard to believe, but sometimes we forget to actually define what a work week is in any of our policies or our handbooks.
Right, I know, it does happen.
And so sometimes what happens is there might be an employer whose work week starts on a Sunday and ends on a Saturday, and maybe somebody changes a job and they go somewhere else and that work week starts on a Tuesday and ends on a Monday. So it's really important to have your handbook as well as your policies that define your work week. And defining your work week is there's no wiggle room on this. This comes straight from the Department of Labor. Department of Labor says a work week is 7 consecutive 24-hour periods. So it's 7 days, 24-hour periods. However, it does give you a little bit of leeway because you can begin your work week on any day at any hour established by the employer. And we put any hour because that also should be included in your policy, because you might want to say your work week begins at 12:01 on Sunday in the morning and ends at 12 p.m. on Saturday, 7 days later. It's really important with your non-exempt people because they need to understand when they go into overtime, because that work week defines that.
Okay, so, when we think about defining our work week, making sure you have that in your handbook and having your policy is really important. And I think sometimes, I think the most common work week definition is like what you were talking about, Karen, is like 12:01 a.m. on a Sunday through Saturday at like 11:59 p.m. or something like that. I see that a lot in employee handbooks. But, Karen, I think what's important is let's do some calculations. I think it's important we kind of warm up and
absolutely
take a look at a couple different departments and different opportunities. So what do you think about that?
Yeah, well, let me test your brilliance on this one. How's that sound?
Oh, well, good. That's scary, Karen.
Okay.
We'll try.
Well, and you may need a calculator for this, but I want to tell you a story about Jim.
Mm-hmm.
And Jim is an incredibly awesome employee. And he is so awesome that he actually has the opportunity to work in 2 different departments.
Wow, that's awesome.
Everybody wants Jim to work for them. So he typically earns $10 an hour straight time in Department A. But then when he goes over to Department B, he earns $15 an hour straight time. So last week, Jim worked 28 hours in each department, making his total hours worked for the week 56 hours. And then, because he is even that much better of an employee than everyone else, he received a flat shift pay differential amount of $100 and a $50 spot award bonus. So he had a really good pay period. So I'm going to ask you, Amy, and you may need a calculator on this, and it's okay, you can use one. What is Jim's total gross pay? And let's just, for the sake of today's conversation, say we're going to talk pre-tax, because I'm not going to make you figure out all the taxes on this, but what is Jim's total gross pay for the week?
Oh, wow. Okay, well, this could be pretty tricky. So let's go ahead and take a look at this thing. And what I would say, Karen, is I really see in calculating Jim's straight time pay, this is one of 3 steps in the process, okay? So this is step 1, is that we need to first start out by calculating what his straight time pay is. So for purposes of this example, his straight time pay is the total hours he's paid multiplied by his hourly rate.
Mm-hmm.
So in this example, in Department A, he's got 28 hours at a rate of $10 an hour, or he has $280 straight time. Then let's take a look at Department B's base pay, and that's 28 hours at $15 an hour. So that's equals 420 hours of straight time. So his total straight time pay ends up coming in at about $700. Now, our step 2 in our 3-step process is to take a look at his total pay. So if you take a look at this slide, you can see his straight time pay plus the shift differential plus his bonus comes up to $850 total compensation. And to calculate his regular rate of pay, you take total compensation divided by total hours, and that's going to come up with $15.18 per hour for his regular rate. So that's step 2.
And I would say a lot of people forget when they have hourly employees, when they pay any type of spot bonus, any type of shift differential, any type of on-call pay. Even in the healthcare industry, we had a lot of people that I worked with that used to do preceptor pay. So when somebody came in and trained somebody else, they got that preceptor bonus because they were training somebody, and they were forgetting to add that back in to figure out the total compensation, thus figuring out their regular rate of pay. And I would say this is probably the most common error that we ever see in calculating overtime, wouldn't you?
Absolutely.
Yeah, I would say that.
Thanks for bringing this up. So this second step is really important. You don't want to forget these particular bonuses. If you forget them, you're going to make a big mistake. Then the third step in the process is then, once you've got these 2 steps behind you, to take a look at how you calculate Jim's overtime pay. And so you're going to take his total hours minus the 40 hours. So it's 56 minus the 40 gives you 16 overtime hours. And what rate do we use? Well, we're going to use that $15.18 rate that we came up with in step 2, right?
Right.
Times 0.5 times 16 hours to give us $121.44 of overtime pay. So how'd I do on that, Karen?
You did really well. You did really well.
Awesome. Well, you know what? Before we go forward, Karen, I'm going to quiz you a little bit on another scenario.
Okay.
How you feel about that?
I'm ready.
All right. Sharpen up your pencil. Here we go. So we've got Charlie here. And Charlie is our... he works in manufacturing as well, and he makes $10 an hour, and he works 8 hours a day, Monday to Friday. He's paid on a weekly basis for the purpose of this example, and the time frame for consideration for a bonus is defined as the work week. So 1 week, Charlie worked 40 hours and also received a perfect attendance bonus of $100 for the work week. So, Karen, what would you say is Charlie's overtime pay for the week?
Okay, so Charlie worked 40 hours in a work week. So to me, I don't really think he's eligible for overtime pay because he didn't work over 40 hours, right?
You are absolutely correct. Great job, Karen. You get the gold star for today.
Wonderful. But he still gets his bonus.
That's right.
So Charlie gets just a regular 40 hours worth of pay, and then he gets his $100 bonus. Okay, great.
That's right. Now, it would have been different if he'd worked some overtime, right?
Right. We'd have to go back and do that 3-step process that we did with Jim, because that's the same thing that happened with Jim. If he would have worked over, we'd have to recalculate what his overtime rate of pay would be. Yes.
Exactly.
All right. Well, I have one for you.
Oh, okay. Our last scenario? Okay, let's take this one on.
Okay. So let me tell you a story about Jane. Jane makes $8 an hour and works 8 hours a day, Monday through Friday. She is paid weekly. Jane received a production bonus of $9.20 and worked a total of 46 hours during the last work week. Amy, what is Jane's total gross pay for the week?
Oh boy,
So you get the hard ones.
No kidding. I gave you the easy one. Well, this one's a little tricky. This is how I would go about handling this one. Okay, we're going to take a look at how we calculate Jane's gross pay. So we take a look at that example. Her gross pay would be $8 an hour. Multiply that times 46 total hours plus the $9.20 bonus. Okay, so that's her total straight time pay. Now, her regular rate is $8.20 an hour. So if we take that $377.20, we divide it by the 46 total hours, gives us what? Her $12.30 an hour overtime rate. And that's calculated with $8.20 an hour times 0.5, right?
Yes.
Okay, so the second step of this process is to take a look at her pre-tax rate, which ends up being $401.80. But how do we get to that? We take the regular rate times 40 hours of straight time to get $328. Then we take the $12.30 overtime rate, multiply that by 6 overtime hours, giving us $73.80. And then we add the $328 of straight time pay with the overtime pay of $73.80 to give us that total of $401.80. Make sense?
Makes sense to me.
Awesome. That's great. So now we've gone through 3 scenarios of how you calculate overtime pay depending on when you have a bonus, additional compensation, and again, this is just for your hourly people. If we were talking about salaried people getting a bonus, Karen, would this be handled any differently?
Well, if a salaried or an exempt person gets a bonus, we don't even look at overtime because salaried people or exempt people, they can work 12-hour days or 15-hour days, and they could work 60 hours in a week and not receive overtime. So they would receive their normal salary plus their bonus.
Or they could work like 6-hour days and skate by and nobody would even see
Nobody
them, huh?
does that. I can't believe you would even suggest that. But I'm sure that probably happens out there. And that's probably a topic for another seminar or webinar, but there are instances where people will call us and say, do I need to require my exempt employees to work a certain number of hours in a day? Mm-hmm. So that's always a question out there because some people think that, I'm an exempt person, I need to work 8 hours. And other people will classify exempt people and explain their position as you just need to work till you get the job done. And sometimes that job might get done in 50 hours that week, and sometimes it might be 32 hours. So it makes for an interesting discussion, I think.
Absolutely. Okay, well, let's move on to our next topic. That is wage ordinances. Wage ordinances.
So one of our things that we're seeing, and this is a new thing. This is relatively new. We're seeing about 32 cities and 6 counties across the country that have felt the need to increase their minimum wage. So as we know from a national perspective, we had a lot of movement last year in increasing minimum wage, and that all got put aside, and that is now kind of put on the shelf, as we like to say. But some of our cities, counties, or states have decided that waiting for the federal government to come out with a national minimum wage increase would be waiting too long. So they've actually implemented increases in their city, county, or state minimum wage rates of pay. And what that means is basically, and this is where it gets a little tricky for you as an employer, if you're an employer and you have employees that are working in multiple cities, you have multiple locations, you actually might have some cities that have a higher minimum wage than the city next to it or a county. So our recommendation, kind of a best practice, is first of all, if you are an employer that has multiple locations, multiple states, multiple cities, multiple counties, really keep an eye on this because some states, some cities, some counties are really not broadcasting when they make a change in the minimum wage. The second real best practice in this area is to invest in a decent human resource system, information system, or payroll system where you can actually track multiple rates of pay for same positions for different counties, states, municipalities, things like that, because that's how you're going to be able to do this. So, for example, and this is where it gets kind of tricky, let's say Bob works in one city and he's paid $10 an hour when he works in that location, but he comes over to help out because his company has a location in another city, and that wage rate is actually $12. That's the going rate of pay. Well, when Bob works in City A, he needs to be paid at $10 an hour, and when he comes and works over in City B, he's going to be paid $12 an hour. Where the complex calculation comes in is you really need to be able to track, if he goes into overtime, which city he was working in when he went into overtime. So theoretically, if he was working in City B, then his overtime rate is going to be based on the $12 an hour rather than the $10 an hour. So that's why a really good human resource information system, payroll system, is essential when you start to get more complex in this area.
Yeah, that gets tricky pretty fast.
Yeah.
You know, the next tricky area that we see is how to deal with travel pay for non-exempt or hourly employees, right? Because, boy, whether you're driving, flying, sitting around reading a book,
Are you telling me we're going on vacation? Is that what you're saying? We're doing a business trip. We're going to do a business trip.
Well, there's always questions. I get a lot of questions from employees, don't you?
I do.
What do I have to pay? What should I pay? And, you know, let's cover that. What do you think?
Yeah, let's break this down into a couple different areas, first of all, because when we say traveling employees, it's really common to think of an employee who's going away for a convention, big business trip, or something like that. But let's start a little bit more granular, a little bit more closer to home. So the time employees spend commuting from their homes to the workplace is not paid. However, if an employee is required to spend time traveling after the workday begins to call on customers, purchase goods, equipment, you must pay them for this time. So I think that's pretty basic. I'm hoping everybody is doing that. But where it gets a little tricky is when an employee who travels from home before the regular workday and returns to his or her home at the end of the workday, and they're engaged in ordinary home-to-work travel, that's also not work time. But what if they are going on a special one-day assignment to another city? So I'm talking about an employee who typically is working at a fixed location. So let's say Louisville. And let's say Amy's working in Louisville, and I ask Amy to head over to Lexington because there's a special project that she needs to do. But she's going to travel to Lexington and return home in that same day. The time spent in traveling to and returning from the other city is now work time, so she's going to get paid. The time spent traveling to Lexington, however, and this is where it gets complex, so I'm going to pause on this. Let's say Amy's normal commute to Louisville is a half hour. When she commutes to Lexington for that day, it's actually an hour. Well, what the law allows you to do is to actually deduct that normal commute time. So Amy would only be paid for that extra half hour of travel because it assumes that Amy normally travels a half hour to work in the morning, and because she's going to Lexington and that added another half hour, so it's total commute time of an hour, you don't actually have to pay her for that complete hour because her normal commute is a half hour. Does that make sense? Yeah. And that's surprising. I'm sure people raise their eyebrows about that all the time because they say, you're requiring me to drive to Lexington. I should be paid for the entire time.
Well, a lot of times I just see employers be generous and do that, don't you?
Absolutely, absolutely. And then I have seen this actually in home health, and I want to bring this up, and this is a suggestion. A lot of times in home health, most of the employees are actually commuting pretty much the entire day. They're going from patient to patient, nursing home, nursing home. So we will get questions from time to time about, well, when does their workday actually start? When do they punch in? Because one day they may actually be driving to a nursing home, 2 blocks away or something like that. And then another day, they actually might have to go way across the city to another nursing home as their first place that they're going to. So one of our best practices is that what we've normally done is said, if that employee were to travel from their home to their office and it's a 15-minute commute, then maybe the next day they travel from their home to the nursing home and it's a 35-minute commute. A lot of best practices is take the 35 minutes minus the 15 minutes that's the normal commute and pay them for the difference between the two. So same concept about traveling between Louisville and Lexington, but this is more localized. So that's where it gets a little bit more complex. But Amy, what do you think about people who fly? What happens if I ask somebody to go to some incredible convention and they're a non-exempt employee and they actually have to get on a plane on a Sunday afternoon to fly to, I don't know, let's say Orlando. Orlando sounds kind of nice at this time of year.
Yeah, absolutely.
Yeah, so how would we treat an employee that way?
Wow, well that's one of those tricky things where you can start reading books at various times, right?
That's right. Yeah, well, I will tell you kind of how I've seen this, and this is really what the DOL recommends, is that if an employee's normal workday is 8 to 5, and this is going to be shocking for people, so I'll take just a minute, but if they're normally, let's say 9 to 6, and they leave Sunday at 3 p.m., and they are flying to another city, the employee gets on an airplane, they arrive at the assigned location at 8. So remember, they normally work 9 to 6, and they get there at 8 p.m. In this situation, the employee is entitled to be paid for 3 hours, the 3 p.m. to 6 p.m., because that's their normal workday. But no compensation is required for traveling between 6 p.m. and 8 p.m. So if the employee completes his assignment at 6 on Friday and travels home that evening, none of the travel time would be considered as hours worked. And that is a very common mistake. Now, what we do see is sometimes employers will say, you know what, you're traveling away from your home, you're away from your family, you had to get, somebody just babysit the kids or something like that. We'll go ahead and pay you all the way until you get to your destination, but the law does not require that. And that's a very common mistake when we talk about travel pay.
Yeah, it's really tricky. And again, this is just for our hourly people, and it all kind of depends on that workday. So if you've got some real tough employer that makes you travel like between 6 p.m. and 11 p.m., like I made Elizabeth do one time.
I remember that. Yeah, you did.
It was on her birthday. It really made her mad. But we were in Las Vegas, so I think that made it better. You got to really watch those kind of rules because, what the law requires is one thing. And then, but again, most of the time employers can be a lot more generous if they choose to. But knowing the rules is really important. Something else that's really tricky is driving time and riding time in cars. Don't you think? There's kind of weird rules about who drives and who rides and whatnot, right, when it comes to hourly people?
Right. So when we think about people who are driving, time spent driving a vehicle at the direction of the employer, transporting supplies, tools, equipment, other employees is generally considered hours worked and must be paid. So I've arrived to work. Amy says, hey, Karen, I need you to go over and pick up supplies at another location. So I'm going to be paid if I'm non-exempt for that drive time. However, a way that many employers will get around having to pay this, because if you have people driving all over the city, and we all know sometimes accidents occur, you get the alert on your phone that 65 North is shut down. Well, if that employee is a non-exempt employee and they're on the road and they're stuck in traffic for an hour, they're getting paid. So they could go into overtime. So sometimes sometimes employers will use their exempt foreman to perform the driving in order to kind of cut down on those overtime costs.
Mm-hmm. Right.
But another thing that we have seen too is to actually have a different rate of pay. So you may actually have a driving rate of pay. So let's say you're a non-exempt employee and you make $15 an hour. However, when you're driving to and from, transporting things like that, employer might actually institute a $10 an hour driving rate of pay. Mm-hmm. So that if you do actually go into overtime while you're driving, it saves a little bit of money. Now, I'm not sure how great that is. I'm not sure how many people are going to volunteer to drive. However, that is something to consider. But what about riding time? What if I'm just sitting in the car?
just kind of going along for the ride, Karen?
Yeah. But if I'm required, if this is part of what I need to do, and Amy, you're driving, and I'm sitting and riding, but I might actually be pulling up Facebook on my phone and answering just personal emails and things like that, I am still on the clock. You're making me go someplace.
Mm-hmm.
So
right.
Things to kind of consider. So again, be careful when you start looking at your travel time and your travel policies. And what's really important here is the word policies. The things that we talked about right now really need to be in your handbook. They need to be written in a policy so that staff understand how they're going to be properly compensated. So there's no questions, because you don't want disengaged staff members because they're disgruntled because they didn't get paid a certain amount of money that they thought they would. So make sure that your policies are in place, your handbook is in place, and that you communicate the way that you're going to pay your travel time.
Yeah, absolutely. So again, having a travel time policy will save you from some of the pitfalls that people run into. And again, it gives you an opportunity to think about how generous you might want to be to take care of your employees who are required to travel. And, anymore, it seems like travel just has gotten so much more difficult these past few years. So think about that when you create your policy. All right, let's move on to our next topic, discretionary and non-discretionary bonuses. So this is something that gets to be a little tricky. And how you treat both of these bonuses with respect to your hourly people is always something a little unique. So let's talk about what these two things are. Now, a non-discretionary bonus, again, non-discretionary, is a bonus that's announced to employees in advance. And it typically is designed to encourage them to work more efficiently, to stay with the company, to achieve certain goals, and things like that. When you've got that kind of bonus, employees expect that if they meet certain criteria, maybe it's an attendance or a productivity target or something like that, then they will be provided with a bonus. Now, examples of these bonuses for meeting set goals like production goals, retention bonuses, commission payments, and things like that those are typically considered non-discretionary. So those are things that are going to happen. They're going to get paid if people hit specified targets, goals, and objectives, right?
Right.
Now, if we contrast that with what a discretionary bonus is, those are things that aren't announced, they're not very specific, they're not promised in advance, and so there's no real calculation associated with that. So an example, let's say you decide at the end of the year to surprise your employees with a bonus. This would generally be considered a discretionary bonus. Like sometimes, employers have like a Christmas bonus, and there's no criteria associated with that, or maybe a Hanukkah bonus.
Yeah, something like that. Or
yeah.
What about a Thanksgiving turkey? What happens with that? Is that discretionary or non-discretionary?
That's just a gift, Karen.
Okay.
That's less than $25.
Okay.
Right?
It depends on well, I was going to say, it depends on the size and the turkey population for the year. You know how those prices go up. So,
yeah. So those little things like that, gift cards, turkeys, things like that, typically aren't counted in that fact. But a bonus is discretionary if the employer retains the decision-making authority over both the fact that the amount of the bonus, so they don't necessarily publish that, and then also how much to pay. So just kind of keep in mind that non-discretionary bonuses is earned very differently than a discretionary bonus. And if you're going to have to calculate overtime, so those of you out there who have non-discretionary bonus plans, these could be like warehouse incentives, production incentives, those kinds of incentives, you've got to think about those with respect to how overtime is handled with your hourly people. So you want to make sure you go through your three-step process of first calculating your straight time, second, calculating your regular rate of pay, and then third, calculating your overtime premium pay in order to finally calculate your total comp for the week. So keep that in mind with non-discretionary bonuses. Those get really tricky in the end, right?
Right.
All right. So Karen, let's go back and talk a little bit about non-exempt employees. Again, exempt employees are your salaried people.
Mm-hmm.
Let's talk about non-exempt employees because that's really the focus of this webinar today.
Mm-hmm. Okay, so one of the things that I believe that comes into play with non-exempt employees is on-call pay. We will get a lot of phone calls about on-call pay. And so just for the sake of today's discussion, I want to go ahead and define on-call pay as an employee who's required to remain on call on the employer's premises or so close that this person cannot use their time effectively for their own purposes while on call. So let's just stop there for a second, because this is very common in healthcare, very common with maintenance folks, people that you need to have available for that urgent, it's 10 o'clock at night, electricity is out at the apartment building that you manage or in the factory or something like that. And so you will have somebody who is agreed to be on call. So this is a very tough area to define, Amy, because it really goes to how much flexibility does that employee have in their own evening. Are they able to have dinner? Are they able to, relax, things like that? And so typically, if they are able to go about their own way, then an employer may put some kind of on-call stipend in, but again, it may not be absolutely necessary. Where we get into a little bit of a bigger discussion is on-call pay and cell phones. And so this has actually become, as we started looking at all of the different exemption testing, and we started looking at, before the law was tabled or shelved, when we started looking at who was actually going to have to move into a non-exempt situation, the conversation occurred that a lot of our employees have cell phones, and a lot of them have their work email on their cell phones. And especially more in the social service areas and things like that, where sometimes they're on call in case a patient or a client needs them. And if we require them to carry a paging device or a cell phone and the employee is totally relieved of their duties, the time is unpaid unless they actually get on that cell phone and start answering emails that are work-related. So there's a little caveat in that. So that's why non-exempt employees who are given access to email on their cell phone, we have to be really careful about that, because anytime we send a text, if we're a manager and we send a text, and Amy, I know you've never texted anybody after hours, that's non-exempt, but anytime you would have, if you ever did, you need to make sure that that non-exempt employee gets paid for that time.
Right.
And so same thing, if they're required to answer a phone or a call on a cell phone, when they answer that phone, it's paid time. So federal court decisions have held that on-call employees are not overly constrained if all they have to do is carry that paging device or cell phone. So if you never use it and they're carrying it, you don't have to pay them for it. But again, you have to be very, very careful that if you are having an hourly, a non-exempt employee carry a phone, if they have access to email, anytime they're accessing that after hours, it needs to be compensated.
Okay. Super. All right. So real quickly, let's talk about emergency callback, Karen, because this is like when somebody gets home, it's like 3 o'clock in the morning, and ring, 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 phone, hey, we had an emergency at our office, we need you to come in right now. Or maybe the alarm system's going off and that employee is responsible to go in and, meet the police. So what happens with that?
Well, what we've seen is a lot of employers institute some type of emergency callback policy. And usually what it means is that if it's your turn to be on call, or if this is your normal responsibility, you've got to go back in, that you get some kind of set rate. So it's not really a bonus, but it's an emergency callback amount of money. And how that happens, or what you need to be concerned about that, is that amount of money that you have designated for that emergency callback needs to be substantial enough to actually cover the number of hours that an employee might have to be at work taking care of that emergency so that it's paid at above minimum wage. So you can't pay somebody $10 for an emergency callback, and by the time that they get in the office, they're in the office, they've punched in, they've taken care, or they haven't punched in, but they've taken care of the issue, they've spent 2 hours, well, that's not going to cover minimum wage. The $10 emergency callback divided by 2 hours is not substantial. So when you have this policy, you want to make sure that it's high enough that it's going to cover the normal amount of time that you would think somebody would be dealing with that emergency, so that you don't get into a violation of the minimum wage.
All right. Thanks, Karen, because that can be a little tricky when we have employees doing that. All right, now I'm going to talk about something kind of weird that not a lot of us know about, and that's predictive scheduling with a fluctuating work week.
I don't even know what that is. No, I do, so that's embarrassing if I didn't, but I do know a lot of people do not know anything about this.
Well, it's something you might learn on your SPHR exam or when you're practicing for the PHR or one of the other certification exams, but this is really an interesting way of dealing with allowing for consistent pay when an employee's schedule might fluctuate. So what I found that some employers, particularly in the retail and service industries, I actually run across this a lot with CPA firms, is they don't have consistent employee schedules. You think about a CPA firm, lots of seasonality with, tax season and so forth. So fluctuating schedules, or those that vary from week to week or month to month, give employers their staffed workplace accurately based upon the customer's demand, and it invariably fluctuates. So what happens is there's kind of these shifts that require employees to be on standby or report to work if needed to serve a specific purpose. So on-call shifting typically requires that employees contact their employers within 24 hours of their shift start times and affording employers the greatest degree of staffing flexibility. Over the years, there have been some critics about these practices. They say, these unstable work schedules prevent employees from receiving, a steady flow of income, and it can jeopardize their eligibility for benefits. Right? So that happens sometimes. But, the practice sometimes, the problem has been that the thought is that it unfairly requires employees to secure child care and transportation, and things like that impair the employee's ability to commit to things. But, when I take a look at this in the CPA firm, it's really not something that has been a problem necessarily with the work week. So when I take a look at the fluctuating work week, what happens is it really guarantees that weekly salary if the employee performs the work during the week. So, tax season, people are going to work more. Maybe in the summer, they work less. So the hourly people have a guaranteed salary. But they do fluctuate, and what happens is you've got to take a look at that regular hourly rate of pay that is to be used as the base rate, and then the overtime rate has to be within that minimum wage. So you want to check your state minimum wage laws. So for an example on this kind of confusing concept, you want to be careful about it because you want to make sure that you really understand it well if you're going to implement this. If you've got an employee salary that's $350 a week, and the employee works 40 hours one week and 44 hours the next and 48 the following, then the regular rate would go from $875 an hour to back down to $795 and then down to $729. Now, if you take a look at all three of those regular rates, they are above the federal minimum wage. So you're okay to have that fluctuating work week as it is a salary, okay? So remember, it's kind of an unusual concept. We don't see it in a lot of industries, but clearly in certain industries, it's one that can help manage the cost for the employer and provide some flexibility for employees. All right, next we're up for is to talk about wage theft. Again, another area of risk for employers. So Karen, let's talk about that and what that means.
Well, I don't know if anybody else has seen the increase in the TV commercials from the lawyers. And typically you'll see these early in the morning, but have you been cheated out of your right pay? Are you missing overtime? Contact us and we will litigate your wage theft. And so this is a new term. This is the new kind of, term of litigation that we're seeing. So wage theft really is up and coming. A lot of attorneys are going after employers in this category. And where we're seeing the greatest opportunity for the attorneys is not paying overtime. So again, we've been talking a lot about overtime and making sure that folks are getting paid for any hours. And again, we're talking about Kentucky and Indiana for any hours worked in excess of 40 hours. It could be that we may be paying overtime, but we may be paying it incorrectly, especially if we have those different types of bonuses, things like that we've talked about earlier today. Another area that we're seeing is improper withholding of the final paycheck. So a lot of people will have policies, and for the most part they may be poorly written, that say, if you don't do X, Y, Z, then we're going to withhold your final paycheck until you return items to us. Or if you fail to come in for your X interview or something like that. So
I'm just mad at you and
right.
I'm not going to pay you.
That's right. You didn't give your 2-week notice, so I'm not going to pay you your final check. So obviously, when separations occur, a lot of times it's not the most pleasant condition. However, it's important that you have the policies written, and that if you are going to put something in a policy that says that you have the ability to withhold payment for XYZ, that you have your legal counsel look at that, because those can become very, very tricky. And when you start looking at final pay and withholding pay, and if you're deducting so much that that hourly employee has made below minimum wage, then you actually do have a violation. So you need to make sure about that. Then also a big area for wage theft is not paying for all time worked. And this is why it's really important to make sure that you have a process in place where the employee is signing off on their time every week or every 2 weeks, and then the manager is also signing off on that. And if the manager has to make a correction, then the employee needs to be made aware of that correction as well. And then that final bullet is just talking about not paying minimum wage. And again, we've talked about a lot of these different calculations and things like that. So you want to make sure that when everything is said and done, that that employee is making at least minimum wage before you do anything else.
Right. Okay. So the next thing that we need to think about here with respect to compensation are the rules around compensation, right? And we've got rules that every employer needs to be familiar with. First of all, exempt versus non-exempt. So is somebody eligible for being a salaried employee or to be a hourly employee?
Right.
So, one of the things that we got to think about with the Big Five is what area does this job fall? Does it fall as being exempt from overtime under administrative, professional, executive, outside sales, or computer professionals? And, one of the things we know is, there was that Supreme Court ruling out of Texas where there was this big question about raising the salary to, what was that number?
$47,400 on an annual basis.
Yeah, remember that happened last year? Well, now that's kind of on hold indefinitely, even though some employers went ahead and implemented that. Well, if you're not sure whether a job is salary eligible or it really needs to be an hourly non-exempt paid position, you want to go through the Department of Labor test. Actually, I think it's an IRS test to determine whether a position is exempt or not. And of course, if you need help with that, we've got our own exemption calculator. We do. Our handy-dandy software that really is helpful. And so making sure you have good job descriptions to do that is really important. Now, we also got some weird stuff that we thought for HR junkies like you who are on this call, those of you who've hung with us for 50 minutes nearly, we've got some cool stuff that we thought maybe you might find interesting. So, hey, Karen, let's take a look at what employees are exempt from overtime by specific industry.
Sure. So some of our specific industries, commissioned retail agricultural, including the horse industry. So anybody that works in Kentucky in the horse industry, you do not need to be paid overtime. So that's a complete bummer because that is one of our large industries. Trip rate drivers and helpers, live-in domestics, petroleum product distributors, rail and air carriers. And then here's another one that I thought was interesting was national parks concessions.
Okay.
So if we had a national park in Kentucky and you were working in concessions, I guess you could work as many hours as you wanted and not get paid overtime.
Heck of a deal. That's too bad for those people serving popcorn. Okay, next up is how about employees that are exempt from minimum wage by industry? This is kind of an interesting, too.
Amusement and recreational establishments.
So those carnies, they're not getting overtime, huh?
No, well, they're not. They don't even have to get minimum wage.
Oh, yeah, that's right. Not minimum wage. Right.
And then if you're processing seafood, you don't have to have minimum wage. And our small newspapers, seamen, our babysitters. But here's the big one, a wreath maker. A wreath maker does not need to be paid minimum wage.
That's kind of sad around the holidays, isn't it?
Yeah.
Oh my gosh. Okay. And child actors, well, yeah, what do you know? All right, moving right along. So just a little factoid there for those of you who are with us. We appreciate that very much. The next topic is calculating overtime for semi-monthly paid employees. This can be a little tricky too. We've got a two steps here to really talk about. And again, when we talk about people who are paid semi-monthly, that's usually where you're paying your employees on the 15th and the 30th of the month. And what's interesting about this, as you can see on this particular slide, is the Fair Labor Standards Act really requires us as employers to have this 7-day period for the work week. So again, you want to quantify what your work week is if you're on a semi-monthly basis. And you want to make sure you want to talk about what day is the work week, when it ends, and you've got to manage your final pay and understand the obligations. And then the second step is to really understand the number of hours are in those 2 work weeks, even if part of the week was already paid the previous pay period. So just know if you're a semi-monthly payer of employees, you can get a little tricky with respect to overtime, but there's some good guidelines out there. The next thing is to take a look if you've got overtime owed based upon your work weeks, and then figuring out when the regular rate of pay applies for each of the work week. And you do that by the calculation of taking the total wages divided by the hours worked to give you the regular rate, and then you determine the overtime from that. All right, so now, Karen, it's time to start wrapping up our session by really addressing what are the ideal compensation plans for business and for industry as a whole.
Sure.
What would those look like?
So really best practices are to create written overtime payment policies, add those to your employee handbook. So remember, just having a policy isn't good enough. You need to make sure that it's in the handbook and make sure that your handbook is up to date.
And give it to your employees.
That's right. That's right. Because a lot of times we might have a handbook and it sits on the shelf and nobody reads it. It's important to actually get those to your employees. Also, train staff on overtime calculations, especially your managers, because they are the ones that are signing off on the time each week. So they need to be aware of it. They need to know how to calculate it. And especially if you are in the manufacturing area where you have some complex calculations, some additional bonuses, production bonuses, things like that, that might come into play. Also, fix problems. You need to be able, this is such a just a high-risk area as an employer. There's lots of attorneys out there that are ready and willing and able to take on an employee's complaint when it comes to wage and hour theft. So make sure that you fix the problems, and then also keep a watch for changes in legislation, especially with all of the different city, municipality, state, all of those different minimum wage changes. You have to keep up with that. Subscribe to some kind of alert. We'll try and post those in our newsletter, but you need to keep an eye on things that are changing in the workplace. Yeah, a couple other weird things from an employer standpoint that you should be aware of is, the Department of Labor has got that app for phones now, yes. And that is, our national Department of Labor. I don't think the Kentucky Labor Cabinet has one, but the reality is, the Department of Labor is encouraging employees to report issues, and even we get random questions through our website from time
to time from employees about my employers require me to work this much, should I get overtime? Well, when people start going to the Department of Labor, you don't even have to worry about attorneys. They're coming back to you, and the challenge with that is they're going to go back and look at your back wages. They're going to interview your people. It's going to be really disruptive in your workplace. And then, fines and back payment of wages due gets really expensive and complicated. So it's not just, employees that go to attorneys, it's them going to the Department of Labor, or someone who gets terminated and they're angry and they want to go complain to everybody. I don't know about you guys, but I hear about that happening pretty frequently.
Absolutely. Yeah.
So watch for those changes and pay attention to those key areas by having good plans. And one other final policy to put into place is that travel policy. It's really going to be something that even if you've got people traveling occasionally, having a travel policy is really going to help you as well. So a couple of points that we want you to remember: know your local and state ordinances. If you've got some unique rules in your area, pay attention to those, particularly with respect to overtime or specific wage rates. Your industry might also have some unique nuances to it, so just because you might be a not-for-profit doesn't mean you're exempt from some things. But if you're a wreath maker, hey,
you are.
So sorry about your luck on a few areas of additional compensation. And again, think about the hot areas. If you've got bonuses that you're paying in your facility and you're non-exempt or your hourly paid people are eligible for those, you need to include that in your overtime calculation. Make sure you got your payroll set up to do that well and address these kinds of topics. So double check your payroll practices, make sure that you're in compliance, and hopefully these will be things that you can take and make your company much more effective. Well, Karen, it's been about an hour, so it's about time to wrap up. We just want to thank everybody for being on the call today, and we appreciate everybody's time. We hope these topics today and the tips that we've given you can help you be more effective in your business. Take a few minutes to give us some feedback in the chat. If you've got some questions, we'd love to answer those. Otherwise, if you've got some complex calculations, make sure you reach out to Karen or myself here at Integrity HR. We appreciate your time today. Here's the things that we can help you with. And we also have a few things coming up in a hot minute for those of you who are still on the line. We've got a great topic coming up in November and even a session in December for recruiting best practices. So we hope you'll join us. If you're live in the Louisville area, come be with us. If not, check in when you can.
All right. Thank you, Amy.
Well, thank you, Karen. And thanks, everybody, for participating today. We look forward to seeing you soon. Have a great rest of your day.